Welcome to another Market Matters weekly video. Back doing them after a bit of a long hiatus. I'd like to welcome our viewers back. Now, I'm Nicholas Forsyth, Director at Market Matters, and I've got James Gerrish, our Chief Market Strategist here. Now James, let's kick things off. The big game in town at the moment is obviously the election in the US, happening overnight. Now, what camp are we leaning towards? Are we leaning towards a Clinton or a Trump victory?
Oh, you'd have to go with the odds and go for a Clinton victory. I think the market's been a pretty volatile place over the last couple of weeks. It's a pretty exciting place. There'll be some, there's been some opportunities created, but there's been some, there's been some issues in the market that's played out over the last couple of weeks. So we're going Clinton victory, market to have a relief rally post the election tomorrow.
Fantastic. And the market's not really bouncing too much today. Had a decent bounce yesterday. Do you think we're leading the US here? Because obviously the US market was up a lot overnight.
Yeah, 70 points yesterday. We're still underperforming the US, so we're probably not leading it. Some of if you think globally, like our market is more of a yield market. So if US interest rates go up, if interest rates go up globally, then the Aussie market's still going to come under a little bit of pressure. So you've got to be short. You've got to have more of a shorter term bias, a little bit more active bias in this market. And look for opportunities as they present themselves. So the election, if Trump were to get up, which is a low probability outcome, there will be opportunities in this market.
Okay, awesome. Now let's focus on a few of those opportunities, James. Now, a few that you've touched on in the reports recently. First and foremost, obviously selling ANZ over $28. That was a great call, and Bendigo slightly higher than where it is now. What are we seeing in the banks? Is there more opportunities for yield-hungry investors that obviously get our service?
Oh, we spoke ages, for a long time around October being a seasonally strong period for the banks. It outperformed the market, so we had an overweight position going into October. We took that off by reducing Bendigo and ANZ. We've now got a bit over 20% in the banks. November's seasonally weak. You probably want to have revisit your banking exposure in mid-December for the end of Christmas rally. Hopefully, I know that's what seasonality suggests. So that's what we'll be doing in the banks. Okay.
Some of the longer term opportunities, medium to longer term opportunities, I've identified in the reports recently. Just want to cover a few. Just rattle off three here at the moment. Now, first and foremost, realestate.com. You've hinted at that as being a pretty good opportunity. Also, QBE on the back of rates going up in the US. And the last one is Westfield, one that we called down but has corrected a fair bit. Just wanted you to take us through these ones individually and whether they're worth buying at the moment for investors out there.
Yeah, Rio, great business, but it's been too expensive for a long time. It's been sold down a long way in the last couple of months. High PE stocks have done that. They reported this morning, or gave a trading update this morning. It was a good update. We like that stock sub $50. So if we were to get some sort of flash down below that $50 mark, we'd be looking at Rio again. QBE, sub $10. I mean, it's a bit of a dog of a company. It's been under pressure for a lot of years. The micro and the macro sort of work in against each other. So the macro stacks up, but the micro doesn't. So the macro will start to come to play. The micro will improve over the next few years. So it's more of a medium-term hold QBE, but value and a contrarian play down here. US interest rates going higher, inflation's going higher, so QBE is a way of playing that.
Okay, and one other one that you've identified as a bit of a shorter-term play in the reports is TPM, which is obviously TPG. The telco space has been absolutely ravaged recently. What's a good technical level where we're going to be interested there, and should investors have this on their radar?
Yeah, TPG absolutely have it in recent times. So we're looking at the stock now. The issue is that once a stock downgrades earnings expectations, they're on a high multiple and they're well owned, like TPG was. Then they start to it takes a while for institutional big money to go out of that. So they stay in the doghouse for quite some time. It takes them a while to get off the mat and come and fight back. So TPG we're watching. We're looking for an entry in that. We like the story. We think the market's got a little bit too negative on it, so we're trying to find an entry to go in that. So that will be a shorter term trade. TPG, risk reward at these current levels is starting to look interesting. So keep an eye out for alerts on TPG.
Awesome. And one last thing I wanted to touch on is the iron ore space, the broader mining space. Iron ore got to $68 overnight. Now, a lot of analysts had a $35 or a $25 price target on that at the start of the year. It's gone completely the opposite way. We've had positions early on in the year in stocks like BHP and Rio and Fortescue. And even recently we had a very successful shorter-term trade in Rio. For investors who either hold these stocks or are interested in these stocks, should they be buying at these levels?
Should we be in commodities? Well, commodities have had a pretty good run, so they've run too hot for us in the very short term. I think commodities will pull back. Back in earlier in the year, you couldn't you could buy all the BHP you wanted at $14. No one wanted to buy it. And now it's rallied a long way since then. Everyone's talking about BHP, the broader commodity space. So we're cautious at the moment. Next pullback will probably be buyers of the commodity space. But if you try and marry up the macro, if Clinton gets in, the market bounces, then you get the focus on US interest rates. 82% chance now, Nick, of a December rate hike. So the US dollar should bounce on that, and we might see some cooling off on the commodity space. So they've run too hot for us at the moment. So we're looking for a correction and buying the correction.
Okay, awesome. Thanks a lot for that, James. Thanks for joining us. Now, just to reiterate, we're anticipating a Clinton win tomorrow. There's a few opportunities out there for you to buy. We're not buying banks short term. And we're also avoiding the mining space. But the good thing about this market, given where it is, there is a lot of opportunities out there. So I hope everyone gets something from this. And please watch out for weekly videos in the not too distant future.